Welcome to our daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 26th of February. I hope you like our new slides that we are now using for our video analysis. So what we're looking at for today is a recovery in the dollar and the dollar in also gold price. That gold price sold off in the last couple of sessions. About $60 actually of correction back from 1688 to 1628, but that recovery is now starting to take hold. The dollar is also picking up. You can see the dollar strengthening across the majors against sterling, the yen, against the Canadian dollar and against Aussie and Kiwi. The one it isn't strengthening against is the euro. Slight gains on the euro today, nothing too decisive as that euro recovery just continues to be dragged a little bit higher, and I'll talk about the technical implications of that in a little while. But certainly the big news is this sell-off that we've seen in Wall Street over the last week or so. Huge decline actually on the S&P 500, which is now back to levels not seen since December. The Dow actually is back at and breaking that December low, so that's an interesting point of note. But certainly we've seen that bond yields are falling away. That bond yield on the 10-year hit the lowest it's been since. I actually have to increase that so you can see it. It's lowest since record lows actually, but breached the July 2016 low and hit 130.70. Now, there is no real reason why bond yields should increase from here, because the significant market fear that we're getting, VIX volatility is still at 14-month highs. Actually picked up again from initially falling back yesterday, picked up again yesterday into the close and again today. There's no real reason to think that the bond yields are going to be recovering, that investors are going to be sort of turning away from bonds in this time of market fear. So that seems to be the play at the moment. Bond yields falling, and that is a positive correlation still with the gold price, and I'll talk about the technical implications of that, but certainly the positive correlation, the negative correlation, because what I've done here is I've inverted the chart, I should say. Negative correlation between falling bond yields and rising gold. There we go. So what we're looking for today is more US data, really. We've got the US new home sales at 3 o'clock and crude oil inventories at 3:30. Let's have a look at new home sales. Expected to increase to 701,000. Sorry, 710,000, my mistake, 710,000. And you're expected to see a crude oil inventory build of 2.5 million barrels. And that would be basically, as we've seen in recent weeks, where the building of oil inventories has continued, and that oil inventory stock build is likely to continue today. Now, we've got a couple of Fed speakers. We've got Robert Kaplan and Neil Kashkari today. Kaplan's a centrist, and Kashkari is the big dove on the committee. But it was interesting that we didn't see any real movement from Richard Clarida yesterday. He is a centrist, but borders slightly dovish. He could have used that as an opportunity to start to signal potential rate cuts, but didn't. Said that Fed is closely monitoring, as it has been for a while, this coronavirus. Okay, so that takes me on to my chart today, which is Aussie yen. Now, Aussie yen is a classic signal of risk appetite. So falling away on Aussie yen, which means selling pressure through the Aussie or buying pressure through the yen, or both at the same time. And subsequently, we're seeing Aussie yen falling away. 72.40 is a key level of support on Aussie yen. If that gets broken, and it has had an intraday look at that level today, but not quite made the decisive move, below that 72.40 level really would open the downside, really sort of starts to develop this as being a new decisive phase of negativity, because what we've seen is a lower high in January, a lower high in February, lower lows in January, lower lows in February. So that is the development of a new bear trend, and trading underneath all these moving averages as well, that does not look good. So it is a real signal that markets are going to remain under pressure. Any sort of strength is a chance to sell. We've seen that already this morning. 73 hit this morning on an intraday basis. That was an old low from earlier in February. 73 to 73.20 is resistance overhead, and that is today's high as well. So pressure on that, and you've got momentum indicators negatively configured on RSI, failing around the 50 mark. MACD lines bear crossing lower, stochastics accelerating lower. It all suggests selling into strength, and it really does basically show that through the hourly chart as well. Negative configuration. Look at that hourly RSI faltering consistently around the 50 mark, back towards 30. Classic bear signals there. So any intraday rallies are a chance to sell. You could argue 72.80 perhaps, that old low, intraday low from yesterday. Could that now become another lower high point? So still selling into strength on Aussie yen. So it's a real interesting move that we have through these markets today, and I wish you good luck in your trading, and I will speak to you later. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.